Good morning and welcome to Morningstar. I am Francesco Lavecchia and with me today is Matthew Donen, equity analyst for Morningstar. With Matthew, we are going to analyze the wind energy sector in Europe. Good morning, Matthew, and thank you for being here. So the wind energy sector is performing very well and it has excellent growth expectation for the coming years. Despite that, some important European players had disappointing quarterly results. What is the reason behind this?
Yes, so the primary reason is due to the competitive rivalry among the wind turbine manufacturers. So if we take a step back, there's very limited product differentiation between a Siemens Gamesa wind turbine and one that's produced by Vestas. So ultimately, these manufacturers compete on price, which ties into our second problem, in that their customers contractually lock in the price of a wind turbine many years in advance. And as we see now, the commodity prices for major raw materials such as copper and steel have skyrocketed, which means that Vestas and Siemens Gamesa are unable to pass these costs on to their consumer, which is ultimately why our preferred way for investors to get exposure to the theme is not through the wind turbine manufacturers, but rather through utilities and developers of wind projects.
So if we look at some of the leading Chinese turbine companies, such as Mingyang Smart Energy, we see they recorded over the last 4 years an average revenue growth around 50% and an operating margin above 10%. How can explain the difference in terms of fundamentals between European and Chinese companies, and how, in your opinion, European companies can fill this gap?
So there's very little competitive overlap between Chinese manufacturers of wind turbines and the European manufacturers of wind turbines. So growth is largely correlated to the acceleration and the speed of the wind energy transition in the respective country. Now, the growth in China during the past 10 years has been incredible, and that has been supported by favorable subsidies that expired in 2020 for onshore wind turbine projects and 2021 for offshore wind projects. So a lot of demand was accelerated and brought forward in the Chinese market as developers of wind projects wanted to take advantage of the higher returns for wind projects due to the favorable subsidies. Now, in Europe, almost the opposite is occurring, where there's a lengthy and bureaucratic permitting process which has delayed the transition of the wind energy theme and has created delays of up to 5 years on certain projects. So that explains the difference in growth. Now, in terms of profitability, the Chinese market and the turbine manufacturers have historically focused on much lower and smaller turbines that are less powerful. So they're able to standardize their manufacturing process due to the inferior capabilities of their wind turbines compared to the Western manufacturers.
Okay, so if we look at the market share that the Chinese companies are constantly gaining in the European market, it seems that Europe is risking passing from being dependent from Russian gas to being dependent from China in the field of renewable energies. What could be the implication for the European energy independence, and what the EU should do in order to avoid that risk if it's not too late?
That's a great point. And actually, recently, the CEO of Siemens Gamesa recently stated in public that he's in favor of production quotas to mitigate the risk of Chinese imports into Europe. And what sparked this concern, as I mentioned earlier, is there's historically been very little overlap between the Chinese market and the European market. And that's due to the superior capabilities of European wind turbines to that of China. But the likes of Mingyang have really increased their capabilities and can now match European wind turbine manufacturers in terms of the amount of output of energy that their wind turbines are able to produce. And we've recently seen some projects in Europe actually opt for Chinese wind turbines as opposed to European wind turbines, which historically was never the case. But there are only a handful of these examples. So the best way for the European wind turbine manufacturers to continue their leading market share would definitely be to continue to invest in their R&D capabilities and maintain their superior capabilities of their wind turbines. Now, that's only going to occur if policymakers in Europe are able to accelerate the permitting process so that they're able to grow and make profits so that they can reinvest into their capabilities and offset competition from Chinese rivals. But ultimately, we agree with you and believe that the European manufacturers are going to come under increasing pressure from Chinese producers of wind turbine manufacturers.
Very clear. So thank you very much, Matthew, for your time. For Morningstar, I'm Francesco Lavecchia.